Today, you have about $700 billion of stakeable assets. Multiple billion-dollar staking companies in the market. This is big business, and that's with everyone getting sued. Imagine where we're going to be in a few years once this has regulatory clarity. Mainstream platforms are offering it. It's just such a huge milestone, and one of those things that, looking back over the past 7 years, I'm just so grateful to have been able to play a part in it and to be able to work with the industry together and trying to create this clarity.
Hey everybody, welcome back to the Defiant podcast. I'm your host, Vinny, here with Evan Weiss, who is the COO of Alluvial and the founder of the Proof of Stake Alliance. He was formerly the head of business development for Coinbase Cloud and head of operations at Bison Trails. So welcome, Evan. Thanks for having me.
Thank you so much for having me, Vinny.
Okay, so we have a lot to get into. The red hot staking area is, hotter than ever. But I'd love to just start by introducing you to our audience. Can you tell us about your background and how your experience at Coinbase Cloud and Bison Trails has shaped your approach to Ethereum staking infrastructure here at Alluvial?
Yeah, happy to. So I have a bit of a non-direct path. I actually started my career as a corporate lawyer working in big law, doing mergers and acquisitions. I had gotten kind of orange-pilled in law school, taking a banking law class and understanding a little bit about the financial crisis really opened my eyes to Bitcoin as a non-sovereign store of value. And that kind of just led me down the crypto rabbit hole. And so I did a few years in big law and then really wanted to pivot to working in crypto. It was what I was doing at nighttime. It was where my passion was. And so I really just started working for free, helping out people who I could. I left my law firm and I was introduced to a few folks that were starting a staking company. And it was just super interesting to me because back in 2017, proof of work was by far the main consensus mechanism, but proof of stake blockchains were raising money at an incredible rate. You had Solana and Tezos and Cosmos, and even Ethereum was already signaling that they were moving to proof of stake. And so I ended up working for free and founding something called the Proof of Stake Alliance. The idea was I would be a lawyer. I would kind of work with some of the big white shoe law firms, and we would tackle legal issues.
Pro bono.
Yes, exactly. Get my little start. And then through that, I ended up meeting the founders at Bison Trails, and I was fortunate enough to join them as kind of the first business hire, and ended up building most of the go-to-market operations at Bison Trails. And at Bison Trails, we were really kind of known as the enterprise-grade, security-focused validator in the market. We became the largest staking as a service company in the market, got to about $30 billion on our platform, wow. Mostly selling through large platforms, the Coinbases, Krakens of the world. And then Bison Trails got acquired by Coinbase and was able to help build out the Coinbase staking and Coinbase Cloud and obviously still working really hard in the staking industry.
That's awesome. They kept you on. They were like, we'll take this company and Evan Weiss. Yeah. Thank you. So can you tell us a little bit more about the Proof of Stake Alliance? Like what motivated you to start that, and how has that informed your perspective on, both staking and regulation around staking?
Yeah, I think it was a little bit of just perfect timing. I had a deep interest in just trying to understand technology better and figure out ways to solve problems. What I saw with staking ecosystem was that everyone was trying to solve the same problems. Is staking a security? We're seeing some of these answers now. How do you deal with OFAC and money transition licenses? What's the tax issues around staking? And everyone was kind of going at it themselves, spending money on law firms, wasting money. And I said, why don't we just solve these problems together? They will help everyone's business. And that was really the genesis of the POSA was let's save resources. If we come together, we'll get better results. And I think POSA has always been kind of known as a very crypto native, small trade association, obviously now acquired by CCI and a part of the Crypto Council for Innovation, which is amazing. But it was really this kind of just grassroots approach of people working together. That
in
really,
crypto?
Can you believe it?
Wow.
Yeah. And I think, if you look at the model and what's now kind of started to happen with the staking ecosystem, I think it's a really good a way for other parts of the market to see working together to grow the entire pie is actually the most efficient way to kind of get what you need.
What a concept.
Yeah.
Can you tell us a little bit more about what are some of the steps in regulation that you've seen over the last few years? I want to jump into what the breaking news is of the last couple of weeks, but can you tell our audience just a little bit of what you've witnessed over the last, since 2017?
Yeah. I think, early days, 2017, 2018, 2019, honestly, before the Biden admin, it was regulators that were trying to understand these things. They weren't big enough that they felt they had the pressure necessary to actually give guidance. Some of the really forward thinking, like FinCEN was doing this, but people were actually intrigued. They wanted to understand more. They were very clear with you. Here are the risks we see. I remember engaging with the SEC in 2019, and they're like, we see risks of like people saying you can earn 100% yields on staking, but then the token goes down, 100%. And so they were very, very honest, and it felt like very good faith, trying to actually create rules and foster innovation. I think the Biden admin really took a different approach, which was very anti-crypto. Those conversations were cut off. And then we saw the industry change a little bit, which was people went on offense. They started bringing litigation. Obviously, the Biden administration was suing a lot of major, but there was also trade associations suing. The crypto POSA was actually brought one of the first ever litigations against the IRS around staking taxation, and so it really shifted from defense and offense, a lot more aggressive. And I think that the industry needed to do that. And now it seems like we've really moved, and we're finally in the step where we're getting regulatory clarity from agencies. We have policy being passed on both sides of the House and Senate, and it feels like we're in a new world where we're going to have really true regulatory clarity.
I just love how across crypto, the industry as a whole seems to be like, well, if you guys aren't going to do it, we will. And we'll probably do it better. Because I still am not convinced that people in government who are regulating on crypto actually know what it is.
Yes.
And it's like, how are you... I've been in crypto for 4 years and I'm still learning. I think it's one of those beautiful industries that things are developing so fast, you'll never truly be an expert. Feels good.
You can't, I think, is the reality. And if you're on the Hill, you're doing a million things. This is a small part of your job. I mean, when we used to initially had meetings on POSA in 2017, 2018, 2019, this just went over. They said, this is a joke. People really didn't care. Now they're starting to care. But I think what the industry has done a great job is we've been spending money. And we've been putting people on the Hill who understand this stuff, who can speak the language, who can get to the right, staffers who are making policy. And so it needed to take time, money, energy. The industry was lucky. I think we were all scared, for the future of the industry over the past couple of years where things were. And so that was kind of the forcing function I think we needed to drive the change that we're now seeing. Yeah,
for sure. And it's interesting. I wouldn't have thought that Trump would go so hard into crypto in the way he has in the last year. And, for all of his faults, it's great to have this industry in the mainstream conversation, and it's not just negative now.
Yeah.
There's definitely always going to be bad news and, propaganda, like anti-crypto headlines, but there's, I think, a more robust conversation happening in mainstream.
I think 100%. And the reality was there was good guys and bad guys were not being just, there's been a lot of bad things in crypto. I think anyone that's worked in the industry knows that. But now there's an opportunity to really distinguish good actors from bad actors because we're building the regulatory framework. And I think that's just such an important piece to actually building good products and having the right incentives. And so, I think if you would have asked me a year ago if we would have been having the changes we're having now, I would have said no chance. Trump was anti-crypto his first, his first term. But it's been a monumental shift. And, big shout out to a lot of the PACs that worked on this and the companies that invested in it, because I think they've changed a lot of individual lawmakers' minds as well.
Yeah, and you can see it. It does not pay to be anti-crypto when you're running for office.
Not anymore, no, thankfully.
So, thankfully, and hopefully that trend continues because we have a lot of positive things happening. Ethereum ETFs have recorded 4 consecutive weeks of positive inflows, which is super exciting. I'm really happy to have you here to talk about this. What factors do you think are driving this momentum?
I think there's a bunch of things. I think Ethereum over, maybe the past 9 months was at an all-time, so much hate, honestly. It felt like a bottom. It felt like no good news was changing anything. I think there was a lot of changes that ended up happening that have been positives. Obviously, the Ethereum Foundation has made a major change to its operating structure. You're bringing a little bit more pro-minded business folks that are thinking a little bit more like a startup.
Comms
which I think,
people.
Comms people, operators, technologists. It just feels like they've kind of got that startup juice back of let's move and let's operate quickly here. And so I think that's something that the market's waking up to. I think also stablecoins. Over 50% of stablecoins are on Ethereum. Most large banks, when you talk to them, they're only looking at one blockchain. It's Ethereum. I think Solana's now making play to be a second layer, but the ability to customize your own L2, have what relays. There's just so much customization and control that I think banks are really excited about. And so I think when you think about the Genesis Act and where that sits, and the Genius Act and where that sits, stablecoins are becoming a reality. I think the regulatory environment's there. And so I think people are waking up to that. And so I think it's really a combination of those things, which is it had a ton of hate. They made some important changes. And now if you're a big institution, Ethereum is the most credibly neutral. It is the most trusted. And I think we are seeing the industry wake up to it again, to saying, okay, if mainstream users are coming on, if we're having real like institutional adoption is coming, Ethereum tends to be the main smart contract platform that these types of institutions are going to build on.
And it feels to me like they're still just on the surface of what you can do on Ethereum. It's like, like I've looked into how you can use smart contracts for law or for engineering or like for so many things, and they're not even there yet.
Yeah,
So,
I mean, I think as an industry, we're still just getting so early, but stablecoins are an amazing first use case. I think anyone that has ever transferred a stablecoin, especially on like an L2 or Solana, you see that's like a magical moment. And so I think it's like, it was really important for us to get this first proof point in the market, because I think that helps people wrap around, oh, this isn't just, vaporware. There's actual real use cases here. And then I'm excited to see all the things, whether that's, what industries can be built on top of it, creatives, how they can start to use these platforms. I think we're just getting to the kind of the base layer of good customer experiences, keyless wallets, L2s. Like, I'm really excited to see where the next few years will take us and how mainstream adoption is really going to be built on top of these protocols.
Yeah, and it's like we'll keep on witnessing these aha moments for them that like we've already gone through those.
Yeah,
but
we've had them in our brain, but now they're starting to become reality.
Like, you get it. You finally get it. Okay.
It's like the internet in a lot of ways. I think a lot of people used to joke about the internet, how to use it, and then once they started to talk to their friends online or buy things, and they realized, oh wait, this is valuable. And I think we're getting closer to that moment for crypto. I
mean, as soon as T+3 is out the door, like what investor is not?
I think we're there. It's getting the regulatory clarity, it's bringing them onto the rails. But that tech is there now to really provide just a way better experience.
And that's what people want, right? Like, it's the same way that I don't know how an ATM card works. I don't care. Nope. It works, right? And so as soon as crypto starts being integrated, because it is the new technology.
100%.
Like, it's not a big
deal.
Rails.
Guys.
It's just rails. Get your train on it if you want to move.
Exactly.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
So I'd like to talk about 3IQ, which is like the first Ethereum staking ETF.
Yes.
They only have a 1.8% yield. I mean, that seems a little low to me, right? Does this yield accurately reflect the true intrinsic value of such assets? Or, how can we bridge the gap to offer something more competitive? Like, like a 4 or 5% would be nice.
You want to get that full staking rate. So it's a great question. So this is really the big focus. What we're doing at Alluvial and with Liquid Collective is really trying to find ways to increase these staking yields. And the reason why that yield is lower is because 3IQ, like most ETFs, has a T+1 redemption. And so you can always come back and get your underlying assets in a day. And that's part of what their mandated as a sponsor is. And so with the Ethereum bonding queue, today that looks anywhere from like 10 to 12 days. And so you have this mismatch, right?
Woo!
The more you stake, the more unlikely you are to be able to fund those redemptions and to make sure that people get their Ethereum back. And so how this works today is people usually stake about 50% of these funds. And that's why you're seeing that kind of like 1.8%. We saw this very similarly with exchanges. Right. Especially, 2018, 2019, used to do what's called what I would call fractional reserve staking. So you would go on an exchange and they would say, stake your assets, no bonding periods. Every proof of stake network usually has some kind of bonding period that requires you to lock up your assets. And so they would give you half of the yield, but you could sell whenever you wanted to.
Right.
And so the goal with what we're really working on at Alluvial is to make it so that this stake can be liquid. How do we turn this stake, which is locked up today, and make it so that can be transferred to a liquidity provider? And so the hope is that you get to closer to 100% of these ETFs being staked, and then we start to get closer to that, 3.5%, 4%, which is the true staking rate.
Yeah, because I think for people to really get in on this, they need to feel like they're at least competing with inflation.
Yeah,
right?
100%. It's 1.8% is not that exciting, is the reality. It doesn't get anyone out of bed. They're like, oh, I think as you get closer to 3.5%, it's exciting. And also, you're just leaving those rewards on the table. You're actually being inflated if you think about it, because other people are earning your fair portion of the network. And so this is, I had a Tradfi colleague once tell me that, in Tradfi, they'll step over their grandmother for a basis point.
Right.
I think we just have not that efficient markets right now because the scale hasn't been there. I expect that to change very quickly with some of the large traditional players coming in the market and how competitive that's going to be.
Yeah, and I want grandma getting 4%.
Yeah, give her the full staking rate, 2025, we can do that.
Yeah, come on. She's got to retire. Go on her cruise, So Rex Shares proposed an Ethereum staking ETF classified as a C corporation for tax purposes, which I know is an unusual approach here.
Yes.
What do you make of this structure and how might it impact the adoption of staking ETFs?
Yeah, I think there's hard to know exactly what the thought process is there. I think speculating a little bit, I would say that right now we have a lot of 1933 Act, grantor trust. This is what you would think of like with the traditional Bitcoin ETFs and Ethereum ETFs we have today.
Right.
They're all structured as grantor trust. They all hold commodities. And so all of those vehicles are waiting staking approval. I think maybe one or two have not filed, but the majority of them now have filed for staking and they're waiting for the SEC to bless that. We feel very confident that's going to happen shortly. There's some tax issues to figure out right now that they're working through. But I think what this was actually kind of an attempt to get through by that. And so they filed as a 1940 Act fund, which actually requires you to hold at least 40% securities. And so, how they did that, whether that's holding, ETFs in Canada or Switzerland, or maybe
Right.
LSTs they thought could be considered securities. We think that's not the case, and I feel very strongly. But I think the SEC kind of understood that they maybe were trying to kind of get around the line on these grantor trust stratus, and I think that's partly why that filing was pushed back on.
Right.
And so, interesting to see how that plays out longer term. I think that the eventual structure that will win will be the ones that we've seen, these grantor trust structures.
Yeah, and it just really feels like we're in this new world where it's like we're trying to make connections here, and we're just like, hey, we just want to pay taxes.
Yeah. Well, and these structures, these sponsors, these big asset managers. This is what they do. They find the most efficient tax structure. They want to handle that. They want to make sure people aren't getting double taxed, and so they've spent a lot of time and money making sure that these structures are the best. And interesting. I think competition is amazing. It's good to see other venues, but it's good to know you have folks like that are in the details, working with the best tax person in the world that kind of make buying and getting staked ETH really easy through these ETFs.
Yeah, because I mean, as an investor myself, I would just love to have something that's as easy as a CD,
Yep.
And again, don't know how it works necessarily, don't care. I just want to be
in your
able
brokerage
to
account, and it's earning you interest or staking rewards in this case, and it's managed. They pick the custodian. There are a lot of things that go into staking, custody, staking provider,
Right.
that the majority of people are never going to care about or have the expertise to dig into. That's the great thing about these ETFs is you got experts that sit inside these companies that have been thinking about these issues for a very long time, and they're packaging these products up in the best risk-adjusted way possible.
Exactly. I want smart people to do smart things for me.
Yes, exactly.
And I'll just report on it.
Perfect.
It's a perfect
Send me my
ecosystem.
sheet. Yeah, exactly. I got my taxes. I'm good to go.
Get me my 1099 or whatever.
Yeah, exactly.
It's all good.
Perfect.
So the Pectra update has recently gone into effect. How has it influenced your work building institutional liquid staking infrastructure for Ethereum?
So I think two big changes. Pectra is an amazing upgrade. It changes a few things. It allows now to have kind of like these, what I call super validators. So before you used to have only 32 ETH on a validator, very, resource intensive spinning up individual validators, to now you can have up to 2048. So you can kind of get these big juicy validators that actually make Ethereum run a little bit more smoothly because you don't have so many validators trying to bid on attestations and things like that. And so that's a major change is you kind of have these super validators. Two things that we've seen on the institutional front that are very interesting is something called EL triggered exits. Before, when you did staking, your validator provider, although they didn't have custody of your assets, they had to sign a message to get you to exit your ETH. And so there was a potential world where maybe the validator lost a key or maybe they went out of business. And so very risk conscious customers used to get things called pre-signed exit transactions, where if that validator didn't sign the message, they could sign these things.
It's pre-notarized.
Exactly. It's yep. But that was complicated. It created some risk. And so now Ethereum allows you to, when you hold the withdrawal credential, which is what everyone holds to kind of custody the asset, you can actually trigger that. And so it gives a lot more control back to institutions who really, I've heard in many of my conversations, no single points of failure. They want to make sure they control that end-to-end process, and that helps that. The second thing that we're specifically very excited about is this idea of called a partial exit.
Okay.
And so the Ethereum unbonding queue has two kind of queues, if you think about it. One is called the sweep, And so it's like a clock. Today, the sweep takes around 8 days. And so depending on where your validator is picked, you have to kind of go through this exit. And so sometimes it'll be faster, but that's the majority of the timeline when you're waiting to get your Ethereum back. The second is called the exit queue. And so this is, today sits around like 30 minutes or so, but you have a mandatory 27-hour delay. So it's like 27 hours and 30 minutes. It's kind of like the fastest you can get out. But what this partial exit does is it allows you to take one of those super validators and bring it all the way down to 32 ETH. Okay. And skip the sweep. And so now you can get your ETH out in 27 hours plus some amount of time. The one thing to think about though is that is dynamic. So if everyone is rushing to exit at the same time, that 30 minutes will build up.
Congestion.
Exactly, kind of like a congestion pricing.
Yes.
So day-to-day operations, we think this could be a really nice way to manage liquidity. It's not something you can rely on, but I think this is kind of an under, maybe like marketed point of the Pectra
I wasn't aware
because
of that.
Not a lot of people are. It's been surprising. And so this to me makes Ethereum a lot more capital efficient. I think, there's been some pushback around like 10 to 12 days and how that looks. Solana's 2 days. I think this was a major, major upgrade for Ethereum. I think it's going to be something that we'll see a lot of these ETF issuers utilize.
Yeah, absolutely.
Get 20% APY on ETH with the High Growth Vault by Kelp in one click. Highgain uses blue-chip DeFi strategies with restaked ETH across Aave, Pendle, Usual, and Elixir, managed by strategy pros Ultra Yield and Upshift to deliver highest rewards on ETH, all in just one click. Deposit your ETH, receive Highgain ETH, and stay liquid in DeFi. Trade or use Highgain ETH on platforms like Pendle and Balancer while still stacking rewards. Follow along these steps to get started.
So you have previously discussed the idea of normalizing staking for everyday users, which is a concept I absolutely love. What barriers do you see preventing broader participation, and how can we as an industry address these issues?
I think the biggest one we've seen is regulatory. So I think we're moving past that. I think last week's guidance was very big, but I think the biggest has been regulatory. I mean, to me, mainstreaming this is bringing this to people where they're at. And so, my crypto native friends all have self-custodial wallets. They probably all have Coinbase accounts.
We've got like 10 wallets.
Yeah, exactly. We're all but I think a lot about bringing this to my friends that have they're interested in crypto. They know I care about it a ton. They've seen on the news. They think it's an interesting asset class, but they're investing through their Robinhood account, maybe their Schwab account. And so to me, making it so that we have clarity so that these businesses, you'd be surprised. Robinhood never offered staking today in the US. That was all due to regulatory, is my feeling. It's a lot of money left on the table for them and their users, but there was just too much regulatory risk. And so I think getting past that is just going to be the milestone that really brings this mainstream. So that when I have, we've seen Charles Schwab wants to offer crypto brokerage. Like when I'm in my Charles Schwab account, I'm on a Robinhood account, I'm holding Ethereum, I'm holding Solana. Why would I not earn these staking rewards? And so being able to bring that to really normal people and to show them, when we first started working on staking in 2018, the ideal play was Robinhood offering staking. Like my normal friends could come in and get staking rewards and yield on their assets. And that is just, I think, such a big piece. So I'd say that the first one is regulatory. The second one, as we talked a little bit about, is the unbonding period.
Right.
So, maybe that 3% doesn't look as interesting because I'm locked up for an indefinite period of time, or I know I won't get my assets back and they're not liquid. I can't trade. And so finding ways, which is what we work on at Alluvial Liquid Collective, to make it so that those staked assets have liquidity and I'm not having to choose sacrificing staking rewards and flexibility or trading,
right,
I think is going to be a huge way to kind of increase staking rates and get more people involved in the market.
Yeah, and I think the exit is really crucial here because, I just went to Non-Fungible Conference last week in Lisbon, and this is with a ton of artists who are still living off of the money they made through the NFT bull run, right? Yep. But these are people who they have their Ethereum in their wallets and then they cash out when they need to pay rent, right? And I was just thinking, we need to have a system where these people who are literally already in crypto are able to stake and make money off of their Ethereum. And then if they need to spend money on something, they can't be waiting around 8 to 10 days. They
need flexibility, 100%, for sure. So I think that's a huge piece. And, it can be substantial. If you're holding a lot of money in Ethereum or Solana or any of these proof of stake networks, we're seeing about 3% staking rate on E3 to 4. Solana gets closer to 10. It becomes very, very meaningful for people. And so being able to pay bills with this, being able to earn, it can be, if you're holding a significant amount with a lot of these artists, like they're deeply involved in the community, they believe in this, like especially the assets they're building on top of, it's a pretty unique advantage to these blockchains that they provide this type of staking yield.
And they're ready to go deeper. Let me tell you. I mean, I think like, especially when we have like so many people on this planet who are really invested in the ethos of crypto.
Yes.
And if we can just create more ways in which these people can like invest and make money off of it and, continue to build wealth this way, I think that's really exciting. And we don't have to just rely on meme coins or Bitcoin volatility or whatever. We can have more structured, low risk assets as well. That sounds very mature.
I think so. And I mean, one of the cool things about staking is like the transactions that happen on these blockchains actually go back to the stakers. So the example I use on Capitol Hill a lot when I'm talking to policy, people on the Hill is like, today I send you money or I go and buy something from you, I'm buying with my credit card. Like that 2.5% that I pay that is showing up on the merchant that goes directly to Visa or MasterCard or one of those. Exactly. Imagine if that was actually going back to users on a blockchain. When I send you USDC, that is actually going back to the holders of these assets.
Right.
And so being able to create this self-sustaining a way for users to also share in the upside of these networks, which, are still very early stage and very volatile. But as we've seen, if you've been in the industry a long time, like the general curve is up and to the right, like there's a lot of upside in these blockchains. So 3%, 10% today could be multiples of that if these blockchains continue to have adoption and grow more real world utility, which I believe they will.
Yeah, then we compound it.
Exactly.
Financial literacy, It's so funny though, like you're describing something that I feel like some people might hear this idea and be like, well, that's too much like a utopia. And it's like, no, it's blockchain.
It's here today.
If you build it, they will come.
Yeah,
okay?
I send you money on Ethereum with USDC, like stakers are getting that transaction fee.
Right, it's built into the network.
It's not going to one single party. It's going to a decentralized base of users, which I think is just such a cool way. And bringing people in, they see that vision of like, crypto is about disintermediating. It's about bringing power back to people. And that example to me is so powerful for that.
Yeah, it's such a simple example, but I feel like that's something that people can really,
grab onto.
Onto, exactly.
Goat Network is the first sustainable BTC yield chain powered by decentralized sequencers using multi-coin POS. Goat's mission is to transform BTC and Doge from passive holdings into active, yield-generating assets through a one-of-a-kind economic model that tokenizes sequencer revenues, unlocking the full potential of BTC-Fi and meme-Fi in a way that's never been done before, and creating new yield opportunities for Bitcoin and Dogecoin holders. Supply BTC or Doge, earn BTC in perpetuity. Get started through our user rewards onboarding portal, onepiece.goat.network.
So let's talk a little bit more about recent regulation. The SEC's May 29th, 2025 staking statement clarified that custodial staking is exempt from federal securities laws registration requirements, which I was a little taken aback by that decision, right? So do you see this as a major win for the industry?
Yeah, I mean, it's what we've been working on for 7 years since we got it POSA. This was actually the first issue we had flagged was whether staking providers, whether, exchanges, custodians that offer this would be, offering investment contracts or securities through these services. And so the fact that we've gotten here when, last year everyone was getting sued for staking at this time.
Literally.
We now have an SEC that is engaging the industry. They're going very deep. We spent a lot of time with them. They've been very receptive to the work we've done. And it's, a milestone that cannot be, I think, today almost feels like quiet compared to when we look back in a year and we see Charles Schwab offering staking and we see Robinhood and we see staking in ETFs all started with that notice. And so I'm just so grateful to the SEC and for the task force for engaging and creating the clarity that we've been so long asking for. Staking is not a small business. It is
not a mom and pop.
We started the Proof of Stake Alliance in 2018, 2019. We had about $20 million staked. It was like Tezos.
Cute.
And, it was very...
I love Tezos.
Exactly. And then we started to see more blockchains grow. Today, you have about $700 billion of stakeable assets. multiple billion-dollar
Wow.
staking companies in the market. This is big business. And that's with everyone getting sued. Imagine where we're going to be in a few years once this has regulatory clarity, mainstream platforms are offering it. It's just such a huge milestone. And, one of those things that looking back over the past 7 years, I'm just so grateful to have been able to play a part in it and to be able to work with the industry together and trying to create this clarity.
I mean, you're definitely leaving a positive mark, not only in crypto, but, the world at large. Because that's kind of the point, right? Like, this is a technology that should be integrated into everything. It's just the most up-to-date technology we have.
100%.
Like, it's not a big deal.
No, we're going to get there. And yeah, I think going back, I'm really proud of the staking industry for coming together on this. About 3 weeks before they got that guidance, 30 of the biggest staking companies in the world all came together through the Proof of Stake Alliance and sent a letter to the SEC outlining this is how we think staking should be handled. And I think if you look at how that was handled and what the guidance we got was very similar. And so
Really?
I think that's a really great proof point for the market of you want to get things done, collaborate, come together, work on shared terminology, and you can feed stuff to regulators that they can understand and be able to act on.
You're like giving them the answer key before the quiz, right?
As you said, this is not what they do every day. If you live and breathe this, do the work for them. They're obviously going to have their own opinions and thoughts and push back where it doesn't make sense, but you can expedite things a lot by being really detailed and professional and delivering them things that they can work off of.
Yeah, and as much jargon as you can remove. It's again, they don't have to know the ins and outs of staking, but what are the potential benefits for this community that we call the United States?
And I will say that I am very impressed with the SEC and the task force because they do have people in that room now that do understand the details. They went out and found people in the industry that have been working in it, understand it, that care about maintaining investor protection. But it's just amazing to be able to work with people inside the regulatory agencies that really get it and they've taken the time to understand it. And I think that was such a smart move by the administration to go out and find people that really understand the technology and give them positions of power to help implement
Put them on the jury.
Yeah,
just a couple,
exactly. Yep. So
crypto nerds.
And that's what they are, honestly. But it's it's a breath of fresh air, and I think we're going to get way better results that are making sure that crypto can be built in the U.S. innovation, but also that they continue to do their job of investor protection and rot out fraud.
I mean, that is something I personally would love. A couple of months ago, I got my wallet hacked, and it was awful. And I was just like, most people need protections. I think especially if you're going to be integrating some of these crypto products into, Charles Schwab, for example, what's going to be FDIC insured? What's going to make sure that these people feel like their clients are being protected?
Yeah.
And that hasn't really gotten into the conversation, I think, until this year.
I think it's also the industry's job to be realistic.
Yeah, the whole not your keys, not your crypto, shut up. Most people, I understand, not shut up. But I think when you say that to somebody.
You can't put that on other people.
No, because exactly.
You can, not your keys, not your crypto. Great, that's your mantra. My wife is never going to hold her own crypto. That is just the reality of the world. And she wants it to be simple and easy and on her phone. And that is how we're going to bring her in, not by shaming her. So I think that is exactly the way that I think, the buffet of options for everyone. That's the great thing about crypto. It's super, modular. It provides that flexibility to people. But yeah, I think as an industry, it's our job now to take this momentum and be realistic. What are the things that we can do to rot out fraud? The questions we got from the SEC 7 years ago around, how do you know sure that people aren't losing their money chasing these crazy staking rewards? These are things that we have to continue to work on as an industry to make sure that when people do come in and they do have these interactions, they're positive.
Yeah, not everyone's going to be a crypto maxi. Why not? I'm not sure.
Yeah, it's just not the way the world works.
Other things going on.
We can continue to play in our circle, or we can expand it and bring more people in, and that's what I've always been focused on.
Yeah, and I love the idea of like with sports, right? You've got the diehard fans, and you've got the people on the other side who like to put the jersey on and drink a beer.
100% the Super Bowl, exactly.
Yeah, have a Super Bowl party. So let's do that in crypto.
Let's bring everyone in because that grows the pie.
Exactly, and a tasty pie it is.
What if sending crypto felt more human? Pulse just launched Red Packets, a new way to gift tokens with meaning. It's gasless, gamified, and claimable inside group chats only. Think airdrops meet social cues on-chain. Backed by smart wallet tech and live across major L2s, Red Packets turn communities into microeconomies of gratitude and growth. No seed phrases, no friction,
Just connection with value. Check it out at pulse.social. With regulation still being a significant hurdle for Ethereum staking and for crypto more broadly, what key steps should institutions or governments take to help the industry thrive while maintaining transparency and accountability?
I think it's continued engagement with regulators and policymakers. I think we've gotten some guidance now that we just talked about, which is huge for the market, but how do we maybe codify that into regulation, into policy? Things like, some of the Market Structure Act that's going through. How can we create some of these, things that limit some of the consumer risk of marketing these products or managing liquidity for users? So I think that's now is just to continue to build those relationships and try to get some of this codified. But we've made major steps, and I think it's also up to the industry to try to promote good practices. Don't do fraud. These types of things.
Don't do fraud, guys.
So I think we've made a lot of progress here, and I expect to see significant more progress. But I think as an industry, it's continuing to be a transparent and honest actor and working in good faith with regulators and policymakers.
Yeah. And what is your vision for the future of staking over the next 5 years? Do you think ETFs and other institutional products will dominate? Or is there still room for grassroots user-driven staking?
My hope is both of them.
Both and.
So our whole entire thesis at the Liquid Collective and Alluvial, and part of why Bison Trails was so successful, was our belief was that platforms, so think crypto exchanges, brokerages, fintechs, custodians, were the best way to onboard users because you hold your funds there, you just hit the stake button. I think that is going to continue to be true. I think the most stake will continue to come in through ETFs, through big, brokerages, through custodians. And so I think that will be the dominant mechanism of how people stake. But I think there are ways to continue to make sure that we can decentralize Ethereum and be good actors. I'll give a team a plug who I really love called NodeSet, where they're actually trying to curate independent node operators and do things like KYC on them and make sure they have best practices. And maybe you can plug those types of products into some of these large ETF issuers. Mm-hmm. We have great industry actors like Bitwise that donates a percentage of their ETF funds to open source developers. My hope is that we'll have other larger traditional institutions continue to be leaders and building into the crypto ethos. But I think it's hard to change the dynamics of how people interact with these products. And I expect that to continue.
Yeah, I think as people get more comfortable, it'll be okay, we can introduce more products.
Exactly, and we can do it in a way that's decentralized, that, gives stake and access to small independent operators. So my hope is that as Ethereum staking becomes almost more commoditized, there's better practices, we can bring some of these smaller players into some of these bigger deals, where in the past, you had to be kind of the biggest staking companies to get access to ETFs. I think there's a world where we can really try to do both of these things.
Yeah, and do you see a world in which Ethereum staking is a product that is just as normalized and widespread as buying a stock?
I think so. My business partner and the co-founder of Alluvial and Liquid Collective, Mara Schmidt, she actually wrote a paper on this called the Internet Bond. And the idea was Ethereum and the staking rate was a bond, was the next generation. And I think that's what we're going to see. I'm excited to see once some more of these Tradfi folks really start to understand this, the regulatory clarity is there, what kind of products they can build with this. Multi-blockchain, different protocols, staking yields, fixed income products based off. There's so much that can be done because similar to a treasury, you're continuously earning yield, block by block by block by block. And I think that is just, we haven't even seen that Pandora's box has not even been opened of the types of products we'll see in the future once kind of the regulatory clarity is there.
It's almost like cooperation is the best way forward.
That's our belief. Yeah, we think that to build, a product that has liquidity, network effects, you got to work together. And that's the whole vision with the Liquid Collective, is really bringing shared alignment to create a standard in the market.
Yeah. And how do you see the role of liquid staking evolving as institutions become more involved in the Ethereum ecosystem?
Yeah. So, my full-time job is building out the Liquid Collective. We have another product with Alluvial, but the idea with the Liquid Collective was, there have been great crypto native products in the market for liquid staking. Rocket Pool, Lido. We thought that liquid staking was the next evolution of staking. Liquidity, utilize your staked assets as collateral, and that this was going to become something that institutions required because they needed that flexibility and liquidity of the staked asset. And so I think that we're just starting to get there now. We're seeing really strong interest from some of the bigger institutions that want to take their staked ETH and they want to utilize it in DeFi. And that's what LSTs do. What we talked about before, how do I come on my Robinhood account or go to my Schwab account and stake and then be able to sell out of it. You hold a liquid staking token. And so today, about 35% of ETH staked is liquid staking. It's a big number.
Wow, I had no idea.
It's a big number. But that number is crypto native people. It's not institutional users, not mainstream users. I would not be surprised to see that number double in the next year with regulatory clarity.
In the next year.
I think it's going to be a big year for liquid staking. So I'm very excited about it. But I think that is where the future is why stake when you can have liquid staking and liquidity plus staking rewards? It's just a better product.
Well, Evan, thank you so much for spending time with us here at the Defiant. I think this was a riveting conversation. Where can our audience find you?
Thank you so much for having me, Vinny. It's amazing. You can find me on Twitter at evweiss1. I'm there, continuing to tweet about staking all the time, and just so thankful for the opportunity to chat.
Thank you, and hope to have you on in the next 6 to 12 months so we can
we'll be back in a year for my LST prediction.
Yeah, exactly.